The stress test results for Europe's banks are out. These are extremely important in terms of telling us what might happen with our own banks and our own financial future. Adam Shapiro is live from the newsroom with the details. Adam?
Well, and it was the Italian banks that the Europeans and investors are particularly worried about. And the third largest Italian commercial bank, which is also one of the world's oldest, Banca Monte dei Paschi di Siena, actually came out worst in all of the EU bank stress tests. It had minus, what was it, 2.4% capital ratio. This is well below, obviously, because it's negative, the 7% that they were aiming for. The EU was hoping that the banks would be increasing their capital equity, and this ratio for the bank comes in at minus 2.44%. Now, the bank, as we just reported in the last hour, has come up with a recapitalization plan to raise €5 billion from different investors throughout the world, including Goldman, Citi, Deutsche Bank. But they are also creating what they call a new vehicle to unload some of their bad loans. They have roughly €50 billion in bad loans. That's $55 billion, about €9 billion in bad loans they say they're going to unload as part of their 2-year commitment to change their portfolio of non-performing loans and lower it from the €50 billion down to about 14.6. Bottom line is they are the worst of the worst, this bank in Italy, and it's their capital ratio came down with minus 2.44%. This is not a pass-fail, by the way. They failed the test 2 years ago. The Europeans have decided not to use a pass-fail grading system, you might say. They're just saying what the capital ratios are, and this clearly is not sufficient.
Ouch. And this is not good news for Europe. Just to put it in perspective, Italy alone, Italian banks alone, have $360 billion in bad debt that those banks are holding on to. So with these stress test failures, that could be a problem. Adam, thank you very much. Melissa, you got it?
All right. So what does all of this mean? What impact do stress test results have in U.S. markets? That's what you care about. Let's bring in our panel. Charles Payne is the host of Making Money. Steve Forbes is chairman and editor-in-chief of Forbes Media. And Lenore Hawkins is Meritas advisor, founding partner. Thanks to all of you for joining us. Steve Forbes, what do you make of what you just heard?
What it underscores is that everyone focused on Italy, and rightly so. They know a crisis is coming. They're going to have the government could fall later this fall. The question is, how do they bail out the banks? Whether they create a bad bank or whatever name they want to give to it, whether they pump in capital directly, which the European community is not too keen about. But one way or the other, the government's going to take action or knows it's going to fall. And if it falls, it'll be replaced by a left-wing government that wants to pull Italy out of the European Union.
Yeah.
So this is bad news.
Charles, I was going to say, did Brexit break out of there just in time?
Perhaps. Again, I think the whole Brexit thing, we should probably wait another year or two to find out if it really worked out. I think it will, by the way. But the Brexit is interesting in a sense that Italy, to a degree, has Germany over a barrel because, all these other countries are saying, if we can't get the help from the European Central Bank and Angela Merkel, why not go on our own? We'll get our own central bank, print up our own money. So we already saw a couple of weeks ago, almost on the heels of Brexit, where there were negotiations for a European rescue package, if you will, for these Italian banks. It's been talked about. It's in the works. And that's why I think the impact on our markets should be pretty small.
Lenore, what do you think?
He's got it right. I mean, Merkel is really backed into a corner here because let's not forget the potential disaster that Deutsche Bank is. And all of this can trickle very quickly over into Deutsche Bank. If MPS falls, because it's the first one, and obviously we knew it was going to be this bad. We knew it was going to be the bottom of the barrel. If they don't get a solution over the weekend, that is the first domino that falls, and you will see bank after bank after bank in Italy starting to fail, and that will affect Merkel and Deutsche Bank, and she can't have that on her watch.
Steve, do we care if banks in Italy fall?
We do, because it simply underscores how fragile the global economy is, how imperative it is, essential it is to get our own economy in shape. And sadly, what we heard last night at the Democratic Convention was just the opposite. More taxes, higher capital gains taxes. So you have weakness around the world. That's going to have ugly political consequences. That's what we have to worry about more than particular banks. What it's going to do politically, these things have ugly consequences.
Yeah. Charles, what do you think of that? I mean, we know that the Allied Irish banks did poorly as well. How does, I mean, what are the implications of all of that, given what Steve said?
Well, you know, we don't have to go back that far when we used to wake up every morning. At least I did. And the first thing I wanted to know is how was Greece doing? Okay?
Right.
I mean, think about it. It's like less than 1/2 of 1% of the global GDP, and I'm on pins and needles. We all were, and it was moving our markets a lot. I don't know that the contagion effect is there. It's possibly there, but I think there'll be major intervention. But I love what Steve just said, because the cautionary tale about all of this, it's important, because what we're being told in this country, we can go further down this path to Europe. In fact, we can actually start to gallop down this path, or we can finally draw a line in the sand.
Yeah.
The contagion is in the contagion is what we're looking at for the solution. You look at what was happening in Greece, and what's still causing the problem there is it is too hard for businesses to function. They can't start, they can't grow. We've got the same thing in the U.S. You've got it in Italy, where businesses can't hire and fire as easily as they ought to be able to. They can't get us started. You look at what CEOs across the world say is their #1 problem. It's red tape.
Okay, well, let's bring it back to